first of all, let me tell you, I'm in a really pissy mood because of the politics of this 4-day delay for to announce what is this administration? They're going to play and hang Brainerd out to promise to the progressive wing so that they get in line with everything that they've threatened. I truly don't understand this, but politics being politics, without it, I'd have to be teaching you at the university, so this isn't bad. I should say, as Sturch would say, stop complaining.
Yeah, right.
He's right.
He is.
He's right. It's exactly right. But I'm just irritated, you know, and they're not even good at it. It's like I said, if I was doing a Saturday Night Live, I would be ripping on Jen Psaki. This woman could lie like nobody I've ever seen in my life. I mean, with a straight, God, she's a professional liar.
Yeah, she's aggravating the way she pounds that thing, and you know that.
I guarantee she's never had a real orgasm. She's so good at lying. That's my Saturday Night Live skit.
That's funny. That's very funny.
You gotta laugh. I'm sorry. You know, I'm sorry to be so crass, but they bring it out of me. Oh, here.
I could.
Isabel Schneibel. What do you got to say, Schneibel? There's another one. Wouldn't know the truth if it bit her in the face.
Why do you figure that all of these games are being played? I mean, politics is about games. I get that, but you know,
okay.
It's worse.
Okay, so let's get to Charles. Okay, so yeah. Let's take his question. I may have to take a break here for a minute to talk to. I'm getting beat up by George Kahn.
Who's beating you up?
Georgie Kahn.
I don't know. So, give me his address. I'll go get him.
No, he's one of my favorites.
I know.
He's a Palos Heights guy.
Oh, is he?
Yeah, good guy. Yeah. He did all the did a lot of stuff at Stone. He still works at Stone. At Shepherd.
We're looking at a house out there.
Yeah, he moved to. He got out of there. Okay. All right, let's go.
All right, so real quick, a little background on Charles. Charles is mid-70s, Vietnam. He was an officer in the Vietnam War. You know, so he's got a very interesting backstory, and he's so he's just. I just wanted to tell you that. I don't know why, what difference it makes, but
I know. I respect him immensely for doing what I stood in. And I think if we sat down and had a cup of coffee, and I had a high lottery number, 325, and I was in the last lottery, so I'm only 68, so he's older than I am. But you know, listen, I respect anybody who goes into the service. I do. I think it takes a lot. And as I said to somebody, if it had not been the war, I probably would have gone in. Because I certainly needed to be kicked in the ass, and would have really directed me. But it takes a lot. It takes a lot to have that intestinal fortitude. So I give him a lot of respect. Okay. So, okay, be in place to cause a major turn in markets. Yeah, that's always a good question, Charles. And I'm one who believes that markets do show you, by the way. I mean, if I didn't believe that, I wouldn't be here having this discussion, because as I talk about all the time with Matt, that what I bring to anybody's table who's doing this is context and nuance. So the ability to read nuance, and you can go back and read my blogs, and there are calls I made in real time because of things that I could see. It doesn't mean that it's going to happen today, tomorrow. I'm usually early. So, and that's why, you know, as I say, sometimes you know, I trade what I do, my work. As I say, you know, I eat my cooking, good, bad, or indifferent. And because I overtrade, meaning my frequency of trade is higher than it should be, although it's getting a lot better with my patience and my ability to not try to be a first mover. But that's, that's beating the floor out of myself, because when you're on the floor, you believe that your edge is so great, you can be a first mover. I don't have that. The only edge I have now is my ability to analyze the context and nuance and put it together and find a profitable trades. Because as I did a blog yesterday. I'm not a blog, a podcast with this guy, Kevin Duffy from Coffee Can. First time I don't even know of him, but it was interesting. I don't know whether I'm going to send it out or not. Not that there's not a lot of good stuff in there. There is, but next week I'm doing, and you guys can all sign up if you go to.
Yeah, I got it.
You got it? You
Yeah.
go to the Financial Repository, because it's going to be interactive, just like we're doing now with Jimmy Bianco and myself. So
It'll be good.
the first one we're doing like that. And tell your neighbors, whoever is interested, because you will be able to really do this in real time. So let's take a shot at it and see how it works. So I'm not sure how many criteria would have to be in place. What are the two criterion? Let's see, a major event, obviously a major war, but even major current transportation issue. I'm not sure that turns markets. It's usually some type of monster financial change. So raising interest rates, I'll tell you this, Charles. I think this, and when I look at it this morning, and let's get into the blog, we're going to go there. I think that there's a real problem in the world right now. The dollar is too friggin' strong.
Mm-hmm.
They're sleeping, and Janet Yellen understands this. Believe me, she is sitting there, and that's why I don't understand why they're holding up announcing their pick for the next Fed chair. In fact, I just read a piece that came out that was written by Sheila Bair, one of my favorites, and she's supporting Brainerd, by the way. So I find that phenomenally interesting. I have a lot of respect for Sheila. I know her. I sat on her committee in Washington. She came out pulling no punches this morning. It's let's see it's on Yahoo News, Financial News. So it's there. I was going to write in a piece, but I'm struggling. But so if the dollar, and I'll tell you why, Charles, if the dollar gets too strong, as I wrote in a blog the other night, it becomes a burden for the massive amount of people who've done a lot of funding of their businesses or households or governments who borrowed in cheap dollars. But cheap dollars, the beneficial effect of cheap dollars dissipates when the dollar rallies, because then you look at it and you go, well, hell, I got to earn a lot more dollars. Because if you live in Mexico, and you've borrowed in dollars, and the Mexican peso is going down, it takes you more pesos to buy those dollars to repay your dollar denominated debt. So you're following that?
Oh, yeah. I don't know if you can hear me, but I'm furiously jotting down notes.
Okay. So so if the dollar goes higher, if it stays within this range, and I've said for months now that it can go test 113 on the euro, which brings us right to that 96 level. I mean, you can put the charts up and see the 113 level takes us back to those lows in July of 2020, or is that right? Let me make sure.
It is.
Yeah, that was when the beginning the commencement of that rally, what I call the Wolfgang Schreibel rally that started on May 24th over that Memorial Day weekend. I wrote several blogs about that, and I actually, and as Andrew Perry reminds me, he was long dollars, and I said the dollar was going to go down because of what came out of Europe, and he battled me and battled me and battled me, which is fine. You know, I'm not here. I'll say it again. I'm not here for validation. I'm here to seek out profitable trades and to engage in discourse to ferret out the best. And if you show me and make me think about things, go, oh, that's, you know, there may be a lot of substance to that, and it may affect me, and I may get better trades. So I don't need the validation. I'm not looking for validation. I am looking for discourse, and this is good because we're getting there. But the dollar is going higher because the dollar, the European Central Bank keeps, under Lagarde, keeps promoting the concept of, you know, interest rates in QE for lower for longer. Well, that in a sense is creating, or she's trying to create an advantage with a weaker euro for European trade. But it's really quietly causing a lot of havoc in the world, and this has to end. So my solution, and I believe it is a solution, because they're all stuck in this. They've all gone down this path of quantitative easing and bond purchasing. They need to have a G7 and agree to all end it on the same day at the same time tomorrow. Then you would all get markets back into a sense where they would become, it would be able to work, because they're all wanting to raise interest rates, right?
I would hope so. Yes, they are.
Well,
And when they're doing it,
all
never
out saying it. Yesterday you had Bullard, who, you know, this guy is so full of, you know, he's another walking bird, so full of shit it can't fly. You know, he just keeps coming out with this stuff. He's on the wrong side of so many things. But on that one, you know, he doesn't say why they should do this. I'm giving the why. If you do it all together, then the dollar doesn't get hung out, meaning that people think rates will go higher quicker in the US and rates are so low in Europe that people start buying dollars. It's not helping. Now, some people, and I'm a hard money person, by the way, so this is difficult for me, but I look around the world and the effects can really be devastating because of the huge amount of debt that's been taken on, the huge dollar funding. So this really gnaws at me, because again, if I ran the Fed interest rates right now, it would be 2 to 3%. And I would be sitting them there, and I would have ended QE long ago, because QE is really not doing anything except elevating asset prices. So they're all stuck in this situation. They're all stuck. And trying to attain an advantage against each other, well, that should be called out anyway. But you need to end QE, and you need to do it all together so that if the US, like, you know, as Powell announced, they're starting to cut back on QE, but it's 15 billion a month. So it's going to take 8 months, because they were buying 120 billion a month. So it's still adding that type of liquidity to the system. That's just wrong. And the Europeans are really doing worse. And Lagarde, I'd call her out on the carpet going, what is your purpose here? You're already at negative interest rates and you've bought such massive amounts. We're all going to pull back together and see the effect. And then we'll see if we need to raise rates. But that needs to be done, because the world cannot take a stronger dollar. Now, I don't know what's going to be that level where they wake up and go, oh, you know, this really puts us in a bad situation. I don't know. For my sense, it would have been, you know, a 10% rally in the dollar. We haven't gone that high. Let's see let's see what the dollar's up on the year, just for,
what about you know, we've been talking a lot about gold, you know, gold in relation to bonds, gold in relation to currencies.
And it's worked. That gold currency call got me a dinner bought from our buddy Leo the other night, because he said, wow, that was, you know, because it was the gold euro. Because I was taking the ECB on with that going, well, hey, if this is the route you're going to go, who the hell wants to buy that? But I really don't want to own any fiat currency, right?
Mm-hmm.
Because they're all caught in this trap. They've trapped each other. And the only way out of it is to end the QE programs now, yesterday, or as we would say in the New York second, they need to do that.
So if you were the new incoming Fed chair, how would you go about doing that? You would just end it cold turkey. That's
well, it. I would, don't forget when they have the G7, the heads of the country, so the president,
Yes.
ministers,
Right.
they gather. But first you get the G7 finance ministers with the central bankers. So I would call an immediate meeting, immediate. We got a problem here. And this is a problem for everybody. Don't think that anybody's above this.
Would that cause immediate deflation, or would that just take some steam off the inflation, the inflationary pressures?
Well, it would give them some flexibility. All right. So let's go back to now, because it would give them some flexibility. Right now, by saying what they're saying, which is they're going to taper QE, right? But it allows, but they say they're not going to raise rates until tapering is done, because they learned that lesson in 2018, right? Because he made that gigantic mistake.
Yes.
So they're going to taper, which is going to take 8 months. But when you get to those 8 months, people are talking like yesterday, Bullard, well, we'll probably see 2 rate rises. But that takes you basically to July. You have elections in November. I think if they don't raise by August, it'll be off the table until after the November elections.
Sure.
Because the Fed wants to proclaim they're not political. They're political. We know that. And they can look at the political calendar just like everybody else. So, and I'm looking at the Fed funds now, the July Fed funds contract, the futures contract, has actually, 2 for sure, and maybe a third by July of 22. So that rates look like they're going to be, the overnight rate will be 64 basis points as I look at this right now, or somewhere close to that. So that's, right now we're at 12 basis, 13 basis, we're between 0 and 25. So that infers 2 rate rises. Well, then you better curve QE quick, because if you're not going to raise, this takes us to July. So if they really want to confront this, then they're going to have to, and they got to get a move on. But they can't do it if it's going to send the dollar into a massive rally.
So gold, so that gives gold, that puts a bid under gold, so some fresh gold strength and a breakout to the upside here. And it looks like these have absorbed it.
Let me tell you something. If they were to do this, gold will get hit hard, silver, they'll get hit hard.
Okay.
Buyer, after the dust settles, but with this, we've had $100 run up in, since the Fed meeting, I think.
Right.
So, so gold would get hit because then the market would assume that we'd get interest rate rises faster. There'll still be highly negative real yields. And I stress the word real yields. That's what you're left with after inflation, not nominal yields. Real yields would still be highly negative, which will be positive for gold, but the market would have, I think, a severe reaction. And if it didn't, look out. Then we'll get the rally that everybody's been looking for in the precious metals and other commodities, because it'll be deemed to be cheap. I love the grain action today, because I've been talking about this for days, but I think this is based on the Chinese, by the way, that somebody's going to wake up and figure they're better off dealing with the Chinese, because it'll be good for the American ag sector. And the Chinese have been so underbought, it's time that they step up a little bit.
If they start raising in April, July, gold gets hit. Do the indices get hit,
Well,
or
I don't know if gold get it. Tell me what everything is going on around it. Maybe inflation is 8%.
yeah, right.
They're never going to raise enough, right? And this is, I'm going to take a little bow here because the question that I kept raising last year ad nauseum, even in your room, what happens? Well, I said when inflation gets to 6%, and unemployment is 6%. That was would the Fed raise rates? And I said, of course not. I kept asking that question last year. Now we're at 4.6% unemployment, but the participation rate is so low. And again, you've got people at the Fed moving the goalposts. Well, it's not the rate, it's the participation rate. We're not seeing the people who really need to see come back here. So they will always move the goalposts to try to make themselves right. And now they have so much froth. And I would say, and I think this is where Charles goes, there's a lot of froth in asset prices. So if you were to do something sudden, if you were to pull a Volcker, you would send equity markets into a tailspin, but there is no Volcker on the horizon. There's nobody who has, first of all, because they would claim that they're more concerned about unemployment. And unemployment is still too high. And to use the language of Jermone Powell, there's too many people who lost jobs through no fault of their own, who, we haven't dealt with. And until these people are back into the workforce and working and taking advantage of the increased wages, well, we're going to be very patient here, right?
Yes.
So I Charles, work with me. So tell me, are you comfortable? What else do you want me to talk about with that?
Charles, can you unmute a little bit?
I don't know. I'm at.
There you go. I can hear you. Yeah.
Yeah, that was good. I hadn't really thought so much dollar, but so those other things I had listed, that things I just kind of learned. I'm not an expert on any of this, by the way, and I'm not an expert investor either. I just, I had my main job and career, but in the last 15 years, I've been messing around with futures a lot, initially options and stocks, and went through everything that everybody normally goes through for years. But anyway, yeah, that was great. I really appreciate it. I really thank you. I know all the people on this board really thank you for your time. I know you got better things to do, probably.
No. Let me tell you this, Charles, and I mean it. I learned more when you guys ask questions, and that this helps me. I mean, yes, is there a lot to get, and do you get my 44 years of experience of trading, and I'm still studying this. Every day because I have to read it myself, and I just have a few. It's like people say, why do you do this? Well, what the hell am I supposed to do? I've got all, and I was lucky when I was in university and graduate school and undergraduate to learn so much about this through the back door. It was not what my intention was, but I learned a lot about it. So the foundation that I get to build on is great. And I go, what should I do? I can't sell it to any, well, I can sell it. I'm waiting for private wealth, family wealth offices to avail of it, but I would still do this because as my friend Norbert says, it's just a way of paying it back. And people were so good to me coming up and took so much time with me, teaching me how to trade and what I was doing wrong, that I'm really, this is really just, I've been blessed with an ability to have a great amount of knowledge. I really have been blessed. And I don't throw that around easily. You don't hear it, but I know it's unbelievable. And my ability to still work at it and still think this through and still read. So by doing this, it elevates my thinking. And when people ask questions and push back, elevates it even more because it allows me to say, well, yeah, I didn't see that at all. In fact, yesterday, there's a piece that Eric Peters put out, okay, which is as good as it gets, is explaining, because Eric Peters is a very bright guy. Hold on. Let me pull that up.
14.
I'll find it and I'll get it to you. It is worth, because it's everything, why we sit and do this and why we sit and beat each other and trying to figure out this, that, and the other. I think it's extremely important. Hold on. I know where to get it from. Mr. Bruce Light, and he says he's.
Do I still owe Bruce $20?
You still owe him $20.
Bruce is such a good man.
Okay, so let's say I'll get this, so he'll send it to me. All right, so where else do you want to go? We're talking about the dollar and why it's such a concern for me.
Yeah.
And I believe certain parties are really missing it, and they need to wake up with it. They need to wake up to understand, because I really believe this is a severe problem that potentially overhangs this market. So I just raised that issue. I think it's a very serious issue that needs to be raised. And I think the Europeans, through their actions, are really, because they can't get, bearish enough on their own currency and keep talking it down and down and down, because it justifies their continuation of QE, even though the United States announced a tapering. And don't forget, they have far more negative rates than everybody. So
Hey guys, can you hear me?
Yeah, hey Peter.
Hey Ira, hey PAX.
Yep.
Just got a quick question.
sure.
Your blog post was great, by the way, but the conundrum that the Biden White House are in, it sort of reminded me of back when Trump wanted the opposite and he handcuffed the Fed by the Chinese tariffs.
Right. No, it's a very good point.
It's sort of like the opposite now, though, sort of opposite situation. Do you see the Biden administration sort of making it like a power move like that, or is it just going to sort of change their message in their campaign, that sort of direction, or like a power move, like taking it into their own hands like Trump did?
I don't know, because I don't know what they're really seeking here. Okay, I don't. The Biden administration needs to coordinate itself far better. I mean, you can see what goes on with foreign policy. They got one group setting sanctions, and then the other group is trying to do business. Well, placing sanctions. First of all, I'm not a fan of sanctions. I think I understand that you have to respond in some way, and that's considered the best way. But as I've written many times in the blog, sanctions to me are sanctimonious, and that they create a lot of havoc in the world. So you got one leg doing that, and the other is trying to, ameliorate some of that. So I don't know where they're going, and I don't hear anything. The Fed will tell you, and rightfully so, the dollar is the purview of the Treasury. So it's Janet Yellen, and believe me, Yellen is one who certainly understands what's going on with the dollar. But it is amazing because CNBC is not going to talk about it because Sarah Eisen will start asking. I guarantee you, I don't know. I don't watch CNBC anymore. When I want to talk to Santelli, him and I just either email or whatever. But she will be harping about the rise in the dollar causing declining profits for U.S. corporations. because that's what a stronger dollar does when you try to export overseas. And then if they're whatever they're earning, so if you're earning in euros or you're earning in yen or you're earning in yuan and then you have to convert those back to dollars to move them back home, well, it takes more of those. So your profit center declines. So that's Sarah Eisen's a one-dimensional. So she learned under what's his name, Tom at Bloomberg, Tom Keene. So, and Tom Keene knows a lot about currencies, but the only thing she walked away with, a stronger dollar is bad for U.S. corporate profits. So we'll start, that question will start to be raised soon. And again, I won't be there to watch it, but I know her MO, and she doesn't like me very much because I once called her out about it. And, you know, that's a no-no. So the dollar is going to be an issue, but it's more than trade. See, that's the old line of thinking. And it had its validity. It was a detriment to trade. And that's what I would argue right now, that Christine Lagarde is trying to attain whatever advantage she can for European businesses through a weaker currency, especially for the Germans and the French. Because it makes their products cheaper, you know, relative to the US and probably to China with a weaker currency. So that gives them a short-term advantage, and they're trying to raise inflation, right? They're still trying to raise, even though inflation numbers this morning in Europe were much higher than expected. German savers are getting crushed right now, and it's not a good thing for the longevity of Europe, by the way. So this is a serious issue, and it's not because of the trade. I'm focusing on the stronger dollar in terms of debt. And I'm using the numbers from the Institute of International Finance, which at the end of the second quarter, so at the beginning of July, they came out with numbers that global debt had grown by the end of the second quarter to 296 trillion. Not my numbers, their numbers. And more importantly, that global debt grew by 26 trillion in the second quarter. That was a 10% increase. So it tells you how much borrowing has gone on. Now, it's not all in dollars, of course, but a stronger dollar makes that burden tougher for those who borrowed in dollars, even though it's not their domestic currency. That's where the real issue is. So this really could create a global slowdown, by the way, if they start to get nervous and they worry about paying back some of this debt, because the cost of buying those dollars to pay back the debt grows commensurately. So it's not a trade issue. It's a debt issue. And I have to be very clear in that, because from a trade perspective, then it comes back to that. But I'm not looking at that. I'm looking at it as terms of debt. And this is what should be on the policymakers' nightstand right now, and be very concerned about it.
Geez.
Can I ask on that, Ira, as far as the dollar, how do you think, you're saying it's not a trade issue. Will a strong dollar influence or negatively impact, say, rising commodity prices or precious metals? Because I've been amazed this past week and a half, the dollar's been just ripping. And like you said, grains are ripping, gold, silver, it's all going up together. So I'm wondering, is there anything that you see between a strong dollar and potential anything with the commodities?
Yeah, yes, that's a great question. And it will. What's the break level? I don't know. I really don't know. But there will be a break level, and you'll see it, because especially like with the Chinese, you know, somebody posted, oh, I know. Brian from Kansas talked about it this morning, that the Chinese are buying grain from Ukraine, wheat, a lot of wheat. You know, the Russians have put export taxes on because they're worried about not having enough wheat. So the Russians are trying to slow their export. But, you know, the Chinese have bought massive amounts of Brazilian soybeans. And if you look at, as I do, beans in terms of reals and why, every year Brazil grows more and more soybeans, becomes a bigger player. In fact, I think they're bigger than the US right now. And the Chinese buy massive amounts from them. So what it can do is lead to them to search other sources rather than, having to spend their dollars. Although I think the Chinese will buy as much US product as they can because they sit on a massive amount of dollars. And while those dollars may be appreciating, they know that won't last forever because certainly the policies of the US are not really dollar favorable, not in any way, shape, or form. They're just more favorable than the European Central Bank and the Bank of Japan. So, and we're in that mode. So, they may use those dollars like they did last year, by the way, when the dollar roared, then all of a sudden the Chinese started buying massive amounts of commodities. We're all priced in dollars, but now, the United States is sitting on a pretty good harvest right now. And prices have dropped, 30% from the highs that were made in May, up at 16.50 in beans. The wheat's back to its highs. The corn is playing in here, but the beans are certainly cheaper. And we know the Chinese need massive amounts of beans. So that's why I've been bullish the beans quite a bit, and especially once Xi and Biden agreed to do that conference over the video conference. I figured there's something in the back channels. So, am I right? I don't know, but the greens have performed pretty well in the last 3-4 days, 5 days. So I think there's something to it. And the Chinese really do this with great intelligence, because when prices run up too dramatically, they step back. And anybody who trades, and anybody in the cash end of the business, it takes a lot of buying to send prices higher. It takes that buying to dry up to send prices pretty dramatically lower. And the Chinese are not going to race and chase the market, by the way. We know that about them, because we've seen over the years when prices would get strong, they would announce cancellation of shipments, right? And then prices would start to set back down, and all the speculators who follow them in, like happened from May through September this year. There were a lot of people who were very long, and the Chinese just stepped back and stopped buying. So now how much buying will it take? I think that, until we see what the Brazilian crop looks like, we won't know. But the Chinese have to be very careful here. They cannot afford to be caught off here. And right now, US beans are pretty cheap for them. So
on that note, I listened to a recent thing you did with Judd, and
yeah.
he was looking at beans in terms of real, or the
Right. Well, yeah, you picked that
Chinese
up from
buying the real, and then they're buying Brazilian beans as opposed to ours. But do you have anything to expand on that?
No, he's done a pretty good job with it. And he also is looking at beans in terms of yuan. He's run those charts, and he's really done a good job. But he's picked up from my work on that over the years. I think that work has been, and it yields great benefit. As I cite in the book, which is, if you're really interested in global macro, it's one of the really best books, I think, just dedicated to that. It's called Inside the House of Money, and it's written by Steve Drobny, where he interviews what he considers to be, back in 2005, what he had found to be the top global macro. And I'm really proud to be a part of that project, by the way. He really, he didn't believe I existed, and he had to come out to Chicago to, he said, well, I'm just passing through on my way to go interview some others. Somebody told me, I said, yeah, sure. So we wound up sitting for hours upon hours, but he didn't really believe I existed. And I'm really proud but in that book, there's a lot of this discussed.
Could you repeat his name one more time? I missed that.
Steve, last name Drobny, Drobny.
Thank you.
And it's
It was-
called Inside the House of Money. And in there, I had talked about how one of the trades I made was catching a short in the beans back in the early aughts when the beans went from $7 down to $4.50. And that was when, after the Brazilian real was devalued by the market, the real went from 1.8 to about 3.8. Oh, hold on 1 minute, Maddie. I got to talk to
Sure.
my lawyer.
Great job, Joe.
Thanks. Yeah, sorry if I'm distracting from our main stuff. I'm
Not
interested
at
in
all.
commodities and
Very
all.
good.
If anyone's curious, soybean meal has absolutely rallied. In the past month, it's been hit hard, but past month it's gone from like 300 to 380. And then the spread between, I've been watching the soybean oil, soybean meal spread, which was like long oil, short meal had been a killer trade for 6 months or so. And the past month, it absolutely broke apart. So that was something that I found interesting. I'm not trading it at all. I just enjoy watching it. But meal's on a freaking tear right now.
Yeah, Joe, I'm glad you brought that up. That's great. That's exactly what's going on. And the meal, because there was a shortage of vegetable oil, and that's actually kind of crushed the meal because well, no pun intended, because as you do the crush, you wind up with a lot of meal, and that if you look at a chart of the meal, it drove prices absolutely into the ground, which took the beans with them. So now and that's really making me bullish the beans here. I still think that the Chinese, they're just waiting. And usually you would have thought it would have happened towards the harvest with the November beans, but the Chinese stayed off the November beans, interestingly.
And even with a large Brazilian crop, you're still maintaining that?
Yeah, you know what? But I think they need so much right now that they're going to be watching the Brazilian harvest. But if they could make a deal and get some, if they could get the U.S. to back off a little bit with their harsh rhetoric, and you notice there will be no boycott of the Beijing Olympics, right?
I didn't think it.
Will deals be made? That's really the issue we're all going to have to deal with, right? So, but it's a very good question. Very, very, very good question.
On the soybean end of things too, I just wanted to throw something out. I just happened to read it this morning too, is they're having trouble sourcing lysine for a lot of these soy meal products that helps use some of the protein that's in a lot of the soy meal. So what they're saying now is that they're going to have to feed a lot more soy meal to get the same protein content into the meats, is another part of the soybean complex here just lately that's been coming out. I just wanted to throw that in there. In case you hadn't seen it.
Another, and they're also, it's why corn, people are reaching for corn, because next year with fertilizer prices being so friggin' high right now, there's a move, a sense that you're going to get more beans planted next year because beans don't require as much, right?
Right, they don't require the nitrogen into things,
Right.
which goes back to the natural gas into things.
Exactly, right. So, and I've talked about this too, so I'm glad you bring up the natural gas. The Biden administration, wait, let me see if my lads at Praxis, they got something posted up here. Somebody said U.S. reduces stocks and strategic by 3 points in latest week. So that means they drawing down in my, and I don't know who knows here about the oil industry, but I had this discussion with, I'm down here, now I live in Scottsdale, and I'm back to meeting with the group that we ceased meeting in April 2020 because of COVID. These are mostly retired people, and we were very careful, but we meet outside, and there's an oil wildcatter from Kansas who has really impressed me. He just knows so much about this stuff. So we were talking about it the other day. And I think this drawing down the strategic petroleum reserve, while it will get headlines for the Biden administration, is a terrible policy because it's only going to reap rapacious profits for the large oil conglomerates, because who do you think can draw down these barrels? Small, it can only go to the large refiners. So they'll buy lower priced oil and they'll make windfall profits. And then its effect will be minimus anyway. So I think it's a terrible, that's a good headline grabber. It's a terrible, it does nothing for policy.
I know Mark's our oil guy here. He talked about propane recently, which I thought was very interesting. I don't know if he wants
You here?
to hop in, Mark.
Yeah, Ira. So talking to some of the folks in the industry, you're dead on with the SPR. You're also, we talked about last week that, if they release barrels from the SPR, you said Washington's got a big issue if, price rallies back through from where they rallied the SPR. So then you'd have a big news headline issue there with DC. But the folks that I'm talking to on the renewable side, so quickly, I don't want to drone on about the subject because it can be complicated, but refiners have the renewable fuel standard, or RFS, and they have an RVO, which is the renewable volume obligation. So refiners, for the better part of the EPA's basically had an issue since the Bush administration enacted the renewable fuel standard, the second part of that. But basically that just states you need to blend a certain amount of ethanol and a certain amount of biodiesel into the on-road, into the fuel supply. The issue that they're having now is that these credits that trade over the counter, given Biden's stance and push against hydrocarbon industry, mainly refining, is these credits have gone, they trade over the counter in the brokered market. There's some ICE futures, but it really hasn't picked up. The issue is these credits have gone from, say, 30 cents to $2. And that pricing gets embedded into the overall gasoline and diesel price. So the issue that and Bloomberg kind of reported on this, so that it's kind of getting out there into the mainstream news outlets, is that the only way that they could potentially get these prices down for more than a period of time is to reduce the percentage that refiners and obligated parties have to purchase these RINs. And if they reduce those percentages, the ethanol industry, the corn industry is going to be up in arms, because a lot of their profits are based upon these RINs.
Yeah.
But refiners like Delta Airlines owns a refinery who I buy from in Philadelphia. You got other merchant refiners like PBF who don't own retail. They don't own gas stations. So their profits are the spread between crude and price and gasoline and diesel. They basically have racked up, PBF racked up 1.3 billion in an obligation that's due by the end of this year. Delta Airlines, who owns a refinery for jet fuel, is on the hook for 500 million. So the problem is that if Biden doesn't come in and reduce the RVO, these refiners could potentially go belly up. And if you take more refining capacity offline, you're going to have a big issue. But then if he comes in and lowers the RVO, which has been a huge fight, bureaucratic fight for 10 years, it's been a mess. It's been a huge mess. They still haven't released their standards for 2021, which were due a while ago. We're basically coming up to 2022. It's going to be, watch out for that. That's going to move prices considerably if they lower the RVO standard. So he's in a big pickle because he stated, hey, we need to support the renewable space, but he's got this issue with high gasoline and high fuel prices. And that's really the only way that he could lower it down, is to get these exorbitant credit prices to move lower.
That is great. These are great comments. And that's the problem with them. They have a real problem that headline inflation gets in the way of all the theoretical stuff. So you get elected on the headlines. You don't get elected on the theoretical, because it's too distant to really realize. You're not realizing it. And you bring up another good point. So, and this has always been my problem with ethanol. And I actually learned quite a bit about it back in the 05, 06, 07, when I actually tried to buy an ethanol refinery in the Texas Panhandle that was owned by the Texas Sugar Cooperative, and it was the plant was using sugar and what you call it, not corn, but not alfalfa. What's the other feed?
Milo.
Sorghum.
Sorghum.
They were using sugar and sorghum to make ethanol, and the numbers were just unbelievable. But of course, not being from Texas, there was no way that myself and some others who had looked at this and they were actually looking to put a bid in it, were going to get it. I explained that to these guys, but it's okay. We pursued it anyway, and it taught me a lot. But I've learned a lot about ethanol. But when you bring food into the energy equation, they've been fortunate because we keep getting record crops. But if you get a bad crop and you have what you just walked us through with all the renewable, with all the ethanol credits, you are going to wind up in some serious trouble. You want to talk about headlines? You're going to worry more than energy headlines. You're going to have food headlines, and food headlines are a very bad thing for any administration.
Yeah, I mean, it's there's been, I think, 9 U.S. refinery closures in the past few years, and they're on the brink again. I mean, a refiner that I used to work for went bankrupt. Actually, I had left, but they ended up going bankrupt twice. One of the largest refiners on the East Coast, because of they're merchant refiners. Meaning they don't have any retail gas station outlets to generate these credits. So there's a lot of merchant. So you're taking a lot of refining capacity offline, and then with the issues with low global supply, well, you'd say, well, normally PAD 1, which is New York Harbor, the East Coast, typically will import a lot of gasoline from Europe. Well, that arb is well closed and there's no gasoline coming over. But then you have in cash market, you have a ton of gasoline in the Gulf Coast. So you take off refining capacity and you're going to end up with more and more issues. And the problem with that is, there's going to be the less supply. But let's not forget, the whole plan all along, just based upon what we've seen in the rhetoric, is that you have to, make alternative and electric cars, a more viable option for people. And yeah, you can potentially give out a $12,500 EV credit. We talked about it in the group before, Cash for Clunkers. So you're going to give out a $12,500 EV credit. And how are you going to make that look better to get more electric cars on the road? Because adoption, I think, is only 4% of vehicles right now are electric. So, obviously, markets need to change and grow and adapt. And we know that electricity, EVs are here to stay based upon a lot of production. But, in the interim, it's going to be very painful for a lot of folks if more refining capacity goes offline. Another refinery shut in Louisiana, so they're shutting left and right, and I think that's going to be the way of the world for a long time here. So it's phased out.
Let me raise a question to you. What's happened with the Citgo refineries now that there's no oil that comes basically from Venezuela? Because the Citgo was owned by the PDVSA.
Yeah.
Meant to refine that super heavy crude that comes out of Lake Maracaibo and what Venezuela is famous for. So I don't think we're seeing much of that, but what happened with the Citgo refineries?
It's been kind of quiet. I haven't heard much from them in a while. I know, during the Trump administration, there was assets or some assets in cash frozen, but I haven't heard much in the way of what's going on with Citgo in a while. But I can certainly report back to you. I could talk to some folks that know people there.
I think that's a very important question. And it's one of the things that's going on in the world. I think Venezuela's reserves are bigger than anybody's. And then, of course, there's the idiocy of stopping the pipelines, but I understand the politics of it. But now you're paying for it because that Keystone and these are pipelines that would have become very important. And if oil stays up here, those tar sands are really, even Trudeau is going to have to bend and start, re-upping them. And the Canadians have actually been very smart because when they built pipelines that take them through the Rockies, out to the Pacific, because their biggest customer sits across the Pacific. So they will. That's why it's all fungible. Well, it's not easily fungible, of course, because there are certainly grades of crude and there's some much more expensive to refine, but they're cheaper to buy. So it works its way through the system. But thank you. That is phenomenal. Matt, anything else?
Always, Ira, there's always, something else, but yeah, we've taken up too much of your time now, so we can always get back at it next week or later on.
I enjoy this room. This is you guys really add a lot. You push me a lot, and I like it. I like to be pushed. And we didn't even talk yield curves, but
no.
And I again, that was pretty good. I hope you did well with them because I know you were.
Oh, I have. It's been a great. God, this is just so much. This is so interesting, and the whole thing. It's just this has just been great. We have had some really good tradable ideas, even not just obviously in the last few months, but even today. I've really got I'm always trading gold from a more technical standpoint. Remember I got long on that overnight gold crash at 1682, and I still have a couple from that. And they added at 1777, and still have just literally two from that. And not quite knowing what to do up here, but knowing that we can come back down, that'd be fine. Would I want to get short? I'm not sure. For a trade, yes. Position, no. I'm looking to buy more at those levels.
I've traded the shorts. Listen, the short side was there to be traded, but
yeah,
but it was the gold currencies. As I maintained 2 weeks ago in the blog, that was what was turning it, because it was showing me the frustration. And Europe better do something, because they're going to be, I believe that it's the Europeans, because they used to always knock the gold down right before, we'd open. So in the 6 o'clock in the morning to 7 o'clock, Europe would be pushing it down, or at the changeover of the book at night at 2 in the morning. So, but they've been buyers, because there's plenty of people who are wondering what happens with this European experiment. And it's an experiment still, by the way. And don't let anybody tell you it's not. It's still an experiment. They're still working this out. And it's my problem. It's my problem with Powell, the arrogance to make these giant bets. I understand the economic impact of stemming the onset of deflationary spirals from liquidation of assets. I understand that and everything that comes with it in debt situations. But to never know when to stop and just keep pursuing it is an arrogance that I can't wrap my hand around.
Just, we've had some really, really, really good tradable ideas, and they just continue to come.
Yep. And they're going to be, because you see, they don't have, there's no exit strategy, right? That's what everybody's woken up to. Central banks don't have an exit strategy. And when they tell you they have tools in their toolbox, like Yellen the other day, well, if inflation, well, give me a hint of what you think you're going to do. You show me who the Paul Volcker is. I don't see one. Who's got, they're so worried about, they've allowed the stock market and other asset classes to rise so dramatically. Who's going to come in and step on the throat of the market? Show me. I'm willing, but show me.
We got to get to, we haven't gotten the yield control, and I think that's coming soon. Certainly something to keep an eye on, and not yield control, but what the yield curve will be doing and how that's going to affect equities.
Well, there is a piece out this morning, again, talking up Brainerd, and believe me, the knives are coming out for Powell. Joe Stiglitz, who's one of the main, the key economic voices of certainly the Biden administration, and Stiglitz came out and whacked Powell the other day in a piece. They're coming after him, and now Sheila Bair, who I have great respect for, I sat on her committee in Washington, and she did a phenomenal job at the FDIC that she ran. When anybody who fights with Geithner in that very open, dramatic fashion, I am a fan of, and she was great, and I have nothing but respect for her. And she comes out now, talking that Brainerd would be a much better choice, and she lays it out very well. It's on Yahoo Finance, so you can read and I sent you that piece, which, trust me, read it and then read it again, because it's the last paragraph under his anecdote. Here, let me go. Let's share it together. It's story time. It's like being in kindergarten, guys. So,
got it. I like reading. I really, really enjoy reading him.
Okay, so here's Eric Peters with this beautiful piece, and you're going to post it to them, but I'm going to read it together.
Okay.
Sit, get your hot chocolates out. Okay, here's this anecdote. Losing money sucks. Lots of other things do too. Most of us hate being wrong. We go to extraordinary lengths to protect our egos, which is absurd, of course, but we are curious little creatures, taught as children to aim for 100% on each test to win every ball game. At some point in a trading career, we either learn to deal with the humiliation of making mistakes or we fail. And the way karma works, the harder we deny our errors, the more public the ultimate humiliation. Lots of investors target longer-term horizons so that they make infrequent predictions, which mean fewer possible mistakes to confront. Traders, on the other hand, make lots of smaller bets, which guarantees frequent winners and losers. But for some odd reason, victories are less pleasurable than defeats are painful. So on balance, trading depletes us, which is why it often destroys people, slowly devouring them from within. Survivors develop ways to inoculate themselves from the pain, humiliation, defeats, and losses. Some train their minds to reverse decisions in an instant. They can appear confused, confusing, contradicting themselves in the same sentence. Such people are masters at self-preservation. The greatest traders and investors eventually build firms around themselves. Team efforts yield psychic benefits that help restore balance to the emotionally drained. Being surrounded by a group of fellow risk takers and business builders allows you to refocus your efforts when you feel you're probably wrong, uncertain, or when you simply lack conviction. And the team gives you leverage to press hard when you feel you're right, and the risk reward is compelling. Because after years of focused effort, introspection, you gain a good feel for when you are likely right or wrong. And you begin to see the same in others. Better yet, you can sometimes sense when others are wrong and stubbornly unwilling to admit it. Large groups of such people present the greatest trading opportunity. And as awful as it all sounds, the truth is there is no nobility in this struggle. Joy in the pursuit.
It's really good. It's really good.
He hit it out of the park. I mean, I'm a big Eric Peters fan, and his firm is called, I always forget the name of his firm.
One River Asset Management.
Thank you very much. He lives in rural Connecticut.
I'm trying to copy and paste that part.
And he's
I
got,
don't have Apple Pen.
he's got his oldest son is now a sophomore at Annapolis. He plays lacrosse, but he's a naval cadet. And his daughter, I believe, is heading to West Point next year.
Geez, that's an accomplished family. That's a family driven to get hundreds on their exams.
No, he teaches them to fail. I talked to him. We've done some Zooms, him and I together. And I was introduced to him by Gary Kaminsky, who's one of my all-time favorites. It was one of the great mistakes CNBC made, getting rid of, knocking him off the air, because I thought that show that he had was phenomenal. But Kaminsky introduced me to him, and Eric's probably 15 or 16 years younger than me, and he lives in rural Connecticut. But he is, and his kids content. Well, he put out a thing last year when I did the thing with Santa Mike and St. Vincent de Paul.
Yep.
That was instigated by what his kids did, because in the town that they live in, the high school, people were really struggling with COVID. And so they raised like $65,000 as a fund to help those people who were really in need. So I sent in a check, and then the kids, were talking about what they did. So I said, "You want another check?" They said, No, we got more than enough. Thank you. They're really good kids. It says a lot about him and his wife, who could raise kids like that, who had the ability to see beyond themselves. So, wonderful. So. But that's a hell of a paragraph.
It really is. I copied and pasted in Discord.
Yeah. Everybody should just pin it up, because that's, to me, as I said it to Judd's room yesterday, this is what we're striving for.
Uh-huh.
Yes.